Hello everybody, welcome to today's webinar hosted by A1 Trading. Wait a moment, I will just check who's here. Nobody, isn't it? Oh, wait a moment. Where do I see whether people are joining or not? In the comment section? No. All right, so hello everybody to today's webinar. I am going to share a very important topic with you today, which is actually, I'm going to talk about fake outs, understanding real breakouts and understanding the difference between breakouts and fake outs. And then the very last topic will be, I'm going to talk about how you can actually even trade fake outs. So let me show you first of all what I have prepared for you today. I am first of all going to start with support and resistance, how to draw reliable support and resistance zones. I have already spoken about this topic last week, and I have said a couple of important things on my own YouTube channel, but I will repeat the key ideas once again. And then we're going to talk about the difference between a real breakout and a fake out. Then I'm going to teach you, or at least I'm going to try to teach you, how you can actually even trade fake outs. All right, so let's get started with today's program. Now, first of all, when it comes to real breakouts or fake outs, it has always something to do with understanding reliable support and resistance zones. Now, what does that mean? And I really do want to highlight the key idea that when it comes to support and resistance, and this is my experience of 8 years of day trading, if you do something else, just continue with that. If you don't want to listen to what I have to share with you, I usually, when it comes to reliable support and resistance zones, I usually focus on the higher time frames. That means on, for example, on the monthly level and on the weekly level, right? Because from a psychological point of view, imagine those are levels that didn't just happen within hours, but those are well-respected zones that, you know, they were built within weeks and months, etc. This is one thing I focus on, and there are actually multiple aspects to understand what a reliable support zone or what a reliable resistance zone is. I also focus on how volume has actually developed, right? Because why is volume an important topic? Now, let me show you on my handout to you. Now, the logic of volumes, and yesterday I uploaded a very important YouTube video onto my own channel where I talked about what indicator I use to get insight into how volume has developed. Now, volume is an important indicator for you to understand that in case of a breakout, and when a break happens on an increasing volume, right, a breakout is more likely to be real compared to the situation when you have a decreasing volume. A breakout is more likely to turn into just a fake out, right? So that means, as we can see on this chart, right, on the monthly level, as I can see, we first of all had an increasing volume, right? That means if this zone breaks, it is more likely to turn into a real breakout rather than if this zone right here breaks, this is more likely to become a fake out because of the decreasing volume. Now, this is an important aspect, I think usually doesn't get mentioned that often. Now, what is a fake breakout? As you know, the simplest definition of a fake breakout is that price, you know, runs into a certain resistance zone or into a support zone, breaks through that level, and then moves back inside the previous price range. Now, moving back into the previous price range. What does that mean? And how can I know that price actually really moved back into the previous price range? This has something to do with a daily level. That means I usually check the daily level to understand whether price moved back to the previous range. And before I continue with anything else, why do I need to understand where a fake out or a breakout could happen? Well, usually what I do when I know that we're getting close to a certain support zone or we're getting close to a certain resistance zone, what I usually do as a strategy is I always step aside and I don't trade for a couple of days. I wait for the price to basically give me a directional move. I wait for the price to tell me, yes, we're now crossing a certain zone, or no, we're not doing that at all. And this actually happened right here, right? We had this situation a couple of days ago on Tuesday, and I was actually waiting for this to happen. For this to happen. And what you can then do is, after a certain breakout, you can check on the daily level the next candlestick. If this basically fails to close, for example, below the previous candlestick right here, that just usually means, you know, that was a fake out, and that's not going to work. Just be careful when price moves back into the previous range. Well, there could be a second attempt, right? The second attempt could lead to a real breakout. So always be careful with this and think psychologically. Imagine a well-respected support zone or a well-respected resistance zone get broken, and in this situation, you have market participants basically, you know, getting suspicious and asking themselves, oh, was this a real breakout, or is this now going to be tested once again? A second attempt happens quite often. In 80 to 90% of the cases, you always need to ask yourself, was this maybe just a fake out? Another aspect of a fake out is usually that, you know, a key level gets broken, and then you, on the daily level, you get, for example, something like a pin bar or an engulfing pattern. These are convincing patterns that tell you, first of all, this was not a real breakout, this was just a fake out. Right? This is the first signal, and then you have to see whether that's going to work, right, or not, whether there is going to be there could be now a second attempt, right? Price could now move back and then try to break this zone once again. Now, another trick I use, I actually focus, and I think this is also something that Nick basically mentions on his own channel, is what I have spotted, is focusing on the idea, trying to understand what the overall idea is. I don't get distracted by the situation here. This is not a bearish market, right? You can't say this is a convincing bearish market just because you have red candlesticks, you have an accumulation of red candlesticks on the daily level. This doesn't make a market bearish. That's just, sorry to say this, but that's a bit stupid. Focusing on candlesticks, staring at candlesticks, anyone could do this. Staring at candlesticks doesn't lead to a certain solution. So what you have to do is bear in mind the overall situation, the overall monthly situation, for example. This is a well-respected zone. Why should the zone break? And then why should participants just, you know, market participants just continue a downward trend? What's the logic behind it? That's especially when a monthly zone gets broken. That's a very important idea I really do want to highlight. And another thing is, yeah, that's the definition of a fake breakout. Yeah, a zone, a well-respected zone gets broken, not an hourly zone, right? If a zone on an hourly level gets broken, yeah, that's not that important. But when a zone on a monthly or weekly level gets broken, this usually, you know, needs at least a second attempt, or maybe it was just a fake out. Either it was just a fake out, or the second attempt will break through this zone. Yeah. Now, before I continue with the real breakout, because we also have to clarify this, I just want to ask, do you have any questions so far? Oh, hello, India. Okay, no questions so far. Well, you can also ask your question by the end of the lesson or by the end of the webinar. All right, then let's clarify what is a real breakout. And did you know, in 80 to 90% of the cases, you just have a fake out. That's not surprising, isn't it? Because if, imagine, you know, behind, those are not candlesticks, those are market participants. Imagine now a key zone. Imagine in real life, a key zone gets broken, something very important gets broken or violated. What would you do? You would get suspicious. That, you understand, it's a psychological thing. That means if a key zone gets broken, usually what happens is that price basically moves back. That happens in 80 to 90% of the cases. Now, what is a real breakout? A real breakout is price, you know, price breaks through a certain zone, like a resistance zone, a well-respected resistance zone. Well-respected, once again, there are a couple of aspects to identify what a well-respected zone is. A well-respected zone could be, for example, if this was a previous support zone and then it turned into a resistance zone, that would be a well-respected support or resistance zone. You understand? That's one thing. Another thing is increasing or decreasing volume, but I have already mentioned it. So it gets broken, right? And then there is a second attempt, and then price basically stops at this key level once again. It doesn't violate it, and then price basically continues in direction of the breakout. This would be a real breakout. And as you can see, but even in a situation of a real breakout, usually what we have is a scenario of a second attempt, because anything needs a second confirmation. You can't just act based on a certain breakout. You know, usually the market is looking for a second attempt. It is looking for a reliable fundament, right? For a reliable fundament. And what helps me usually is when I check the daily level to understand the overall situation after a breakout, right? Check the daily level. And also here you could now use candlestick patterns such as hammer or engulfing patterns, etc. Here we've got a lovely engulfing pattern, for example. Yeah. Now, let's talk about something very important. Let me check once again the questions. That's not today's lesson anyway. All right, now let's talk about how do you avoid getting tricked into false breakouts. This is a situation I just copied from this candlestick right here. This happened on Monday, I guess, exactly on Monday. I'm going to talk about this chart right here, GBP USD. That's my favorite Forex pair. And I haven't actually, I usually focus on two Forex pair, GBP USD, Euro USD, because just because you can read the chart doesn't mean that you can predict everything. You really need to focus on the characteristics of a particular Forex pair. You really need to understand what is the overall behavior of this particular Forex pair. That's the reason why I would usually not recommend to focus on hundreds of Forex pairs. But I mean, if it works for you, it's brilliant. I'm happy for you. Wait a moment. Now, let me show you something. All right, yeah, exactly. Sorry, I just forgot what I wanted to say. Now, a trap situation. Look, I have an advice for you. If you have well-respected support and resistance zones, what I usually do is, after I saw this candlestick on the daily level, I knew for sure, I knew for sure that I would, step aside and would not trade for a couple of days. I didn't know for how many days, but I knew, all right, we're now getting very close to a well-respected support and resistance zone. That is usually for me a trigger to understand that I now need to step aside and let the market decide. Yeah, let the market decide. Let the market give you a directional move and get very close to a certain, you know, as I said, to a certain support or resistance zone. And I knew, all right, that's also a well-respected weekly zone. So I was expecting some sort of either, you know, we just touch it and then go back to the previous price range, or we break through the support zone, and then I was expecting to buy some, or I was waiting for a opportunity to open a long position. But what I really first of all do is, in order not to get tricked into false breakouts, is I step aside. I just don't trade for a couple of days, sometimes even for a whole week. Right, a full-time day trader does not mean that you sit there 24 hours just staring at bloody candlesticks and then trading, you know, every single second or whatever. And another thing is, check the chart just, you know, at particular times like 8:30, 10 o'clock, 2 p.m., etc. That means not checking or staring at a particular chart and aggressively looking for opportunities to enter a certain position. So what you can do is, when you see, oh, we're now getting very close, we're running into a resistance or support zone, what you could now do is step aside, wait for the market to basically decide, and then you could decide to enter the market. Because a trap always happens when you stare at candlesticks and then you see a particular candlestick breaks, you know, above the resistance zone, or like in our situation, below a support zone. It goes below a support zone, and then you think to yourself, oh, that might be a good selling opportunity, right? You understand what I mean? You might, this happened, as I said, oh no, as I said, this happened on Monday. So you might have thought, well, we have a convincing bearish market. If the well-respected support zone gets broken, I will basically buy. This is something, I don't know, maybe you thought about buying or entering a short position just because you saw this convincing bearish candlesticks. So usually what is caused, or what causes a trap, is when you stare at candlesticks, right? When you stare at candlesticks and then you see, oh, this candlestick broke a particular zone, I will enter now. This is the biggest trap ever, and it can end, or it can cause actually a bloody scenario. It can be absolutely devastating. So whenever you want to, whenever you want to trade a breakout, whenever you want to do this, ask yourself, is this possibly a false breakout? This could also be a false breakout, right? And as I said, in 80 to 90% of the cases, this is actually the case, right? It is actually, first of all, a false breakout. On the other hand, be careful. What I think now with GBP USD, this is something very interesting. I mean, we had a decreasing volume. I could imagine that they are now looking for something like a second bottom and then trying to push through this zone right here, right? Break this zone right here. And I could imagine that this could turn into a real breakout. I don't know, right? We will see. But I could imagine that this could turn into a real breakout. Why? Because we had quite a lot of, you know, back and forth and back and forth. And if you have, I feel like if you have a closer look at this chart, as I said, a decreasing, if we have a break on a decreasing volume, that was my second, that was my second, the third page. If you have a breakout on a decreasing volume, like we had it on Tuesday, in this case, it is more likely to turn out to be a fake out. That means I'm now expecting the volume to increase once again. That means if the resistance zone gets broken, this might actually turn into a real breakout. But even if it turns into a real breakout, as I said, what usually happens is, you get a second attempt. This is what usually happens. Okay. Now, let me talk about, wait a moment, let me check the questions. I'm sorry, I don't do these webinars quite often, so I have no idea how to, here. Amy, how and when to step aside. Yeah, look, when you see price is getting very close to a well-respected support zone or resistance zone, right? These are well-respected zones, like this one, right? You see this on the monthly level, you see, oh, that's a well-respected level, right? You see it. So on the daily level, what you now do is, as closer you get, you basically, you know, after this candlestick, I'd recommend that people just step aside and don't trade and wait for the market to decide, first of all. And that's the reason, you know, you usually see people saying, or quite often you usually read posts or people saying trading consists of waiting. Well, this is a waiting situation. You understand? When you get close to a support zone or resistance zone, this is a situation for you to step aside and to wait. At least, you know, I'm sharing my experience. I'm not a guru. I'm not a mentor, anything. So, yeah, that was the question. How would you find it out? Now let's talk about the final, the final page. This is what I also wanted to teach. Now we have talked about respected resistance zones, and I keep repeating this idea like a, you know, broken record, because this is so important to me. I do remember a couple of years ago, I mean 10 years ago, when I started trading, I was drawing support and resistance zones on the hourly chart everywhere, and I was like, here is a support zone, resistance zone, and my mentor was, wait a moment, if you do it this way, this would actually prevent you from trading, because then you see support and resistance zones everywhere. How are you going to end up trading? Because this causes some sort of fear, doesn't it? Now, another topic, we talked about support and resistance. We clarified the difference between a real breakout and a fake out. And we also clarified what to do when you have the scenario that you are getting closer to a resistance zone or you're getting closer to a support zone. As I said, a strategy here could be just stepping aside, waiting, letting the market give you a directional move, letting the market decide, and then entering. Yeah. Now, how do you trade fake outs? How do you trade such a scenario? It's very simple. As I have already mentioned it in today's lesson. Look, find a reliable support and resistance zone, plus bear in mind what the overall trend is. The overall trend at the moment on the monthly level, as you can obviously see, is a strong uptrend. We're just stuck in a sideways market. We're stuck in a ranging market. This doesn't mean that this is a convincing bearish market at all. It doesn't mean anything. It's just one bloody candlestick. It doesn't express much, even though it's an engulfing pattern. So it's a convincing uptrend, but we are still stuck in a ranging market, right? This is what we know. That means if I trade a fake out, I am looking, as I said, I stepped aside, and the next day what I do, I open the chart, and on the hourly level, then I start looking for an opportunity to enter a long position, right? That means I long because the overall trend is an uptrend. Yeah, so that means the combination of a reliable support zone, a reliable resistance level, plus the trend, plus a reliable candlestick pattern or price pattern, right, on the hourly level would make you now enter the market or not. And then you can basically enter in direction of the overall major trend. And there you go. Very simple, very easy. And yeah, what else can I say about this? I'm actually already done after 22 minutes. Let me see if there are any questions. You only use support and resistance of daily move. Now, what I use is actually not only support and resistance, but I also keep an eye on the volume. That means I track the volume a bit. I try to understand, oh, all right, we've got a decreasing volume. As I said, if a breakout happens on a decreasing volume, it is more likely to turn out to be a fake out. That means this is also something I usually track. That means that gives me a bit of a confidence that I know, all right, if a breakout happens, it is more likely to turn into a fake out. So I track both. I track volume plus support resistance. And as I said, plus the overall trend, plus reliable, and then I start looking for reliable candlestick patterns, price patterns on the hourly level in order to know when to enter in direction of the trend. Yeah. And this is how you can actually trade fake outs. All right. Okay. Oh yeah, something, maybe the very last point. The whole thing now about trading fake outs has a lot to do with the major topic, price action trading. Yeah, because people sometimes or what happened to me when I upload, videos onto my YouTube channel, a comment I get quite often is, can you talk about price action trading? Well, what am I doing? I mean, I've been talking about price action trading from the very beginning. Price action trading means you're not focusing on just candlestick patterns, right? But you're trying to focus on the major idea. You're looking for key support and resistance areas. You're looking for key breakouts. You're trying to catch reversals. You're looking for double bottoms, etc. This is how I use price action trading, and that might not be the exact definition of price action trading, but the overall idea of price action trading is actually, for example, right here, how to trade fake outs. Again, you try to focus on the overall idea of the market. This is very important. Yeah, maybe something which is very important, what I do want to also mention. Will you explain using a chart on support? Will you be able to explain? Oh, wait a moment, I can't see it very well. Will you be able to explain using a chart on support and resistance? What do you mean? I mean, I used a chart, didn't I? Right? Monthly level, weekly level. As I said, this one, for example, is a well-respected one. And I focus, when I draw support and resistance, I focus on monthly and weekly usually, right? And then daily, but I don't care about the daily level that much. I focus on monthly level and weekly level when I'm looking for reliable support and resistance zones. Now, one thing I really want to highlight in today's lesson is, look, anyone can read a chart. That's not difficult, right? I mean, anyone can predict price direction. That's not difficult. The difficult thing is rather trying to keep things simple, not using that many indicators. And maybe another advice I can give to you is, whenever I want to use an indicator, what I first of all do is I Google, how is this indicator usually, how does this indicator get calculated? When I know how an indicator gets calculated, this makes me either use the indicator or not, because when you know how an indicator gets calculated, you would also know whether it makes sense for your strategy or not, right? So try to keep things simple and stupid. That's very important. And a very last thing, I observe people saying, well, I keep making the same mistakes, but I hope this will change with time developing. No, it won't, because this is not how behavioral change happens. If you really want to teach yourself, and that's very difficult and complicated actually, if you really want to stop making the same mistakes again and again, you really have to find the trigger. What triggers you? And that's the reason why, where is it? Yeah, here it is. This is my trading journal, right? That's the reason why keeping a trading journal is very important. That means not only just writing down your trades, but also analyzing your overall trading behavior. This is so important, right? And then figuring out what is the trigger, what triggers you, what triggers you. This is such an important question. And then, you know how usually behavioral change happens if you can replace a certain behavior, right? If you have a certain behavior and you can replace it by something else, this is when change happens. Do this for the next 21 days and you can change your behavior. You can't sit there and keep repeating the same mistakes again and again and just hoping that this will change one day. No, it won't change, right? Yeah. So I think I am actually done. I will upload a video, not next week, but I have actually planned to upload a video about trading journals, how you can actually create your own trading journal and what I usually, you know, write into my trading journal, etc. And I really hope this would help you to just become a profitable day trader. This is all I want for you as a teacher, you know. Exactly. All right, I think this is it for today. It was a short lesson, but I hope you have learned a lot. I am going to upload my handouts onto my Instagram channel, so you can basically download it or, yeah, and take notes or whatever. Feel free to ask any questions on my Instagram channel as well or whatever, and let me know if I can help you. Okay, I think this is it for today. Thank you very much indeed for A1 Trading, because they have invited me once again to hold this webinar. Thank you very much indeed, Nick, for this great opportunity. I am so grateful. I absolutely love teaching others who basically want to become profitable. That is just a unique experience for me. It means the world to me, to be honest with you. Thank you very much indeed. Thank you very much indeed for participating today, everyone. Thank you, Julie. Thank you, everyone, and hope to see you very soon. Bye-bye, take care.
Hey guys, thanks for watching today's show. I hope you enjoyed it. And before you go, make sure to check out our guest today and also subscribe to the A1 Trading YouTube channel if you have not already. Risk Calculator is a risk management tool built specifically for MetaTrader 4 and MetaTrader 5 to help you position size properly. Their easy to use software will allow you to enter and exit positions with lot sizes that are calculated for you, suited to your risk management settings that you allow for the tool. This is a big thing because a lot of us struggle with over leveraging or accidentally taking a position size too big, and Risk Calculator is there to help. Like I said, with the click of a few buttons, you're able to set your trade and the lot size will automatically be calculated for you so that it suits your risk management plan. In addition to actually setting your trades with the proper lot size, it also allows you to manage your trades as they're going along. Things like trailing stops, moving stops to break even, or even partial take profits are all tools or features available with the Risk Calculator functions that are available on MetaTrader 4 and MetaTrader 5. If you're interested in checking out Risk Calculator, there's a link down below in the description, and if you use that link, it does help to support what we do here on the channel, which is provide free trading content, again, by the thanks to the help of our sponsors. So thanks so much for watching today. Again, make sure to subscribe to us here on YouTube if you haven't already, and we'll see you back in the next one.